Curtis Freeze joins me now live from Tokyo. He is CEO at Gro-Bels. It's a company that develops, sells, and leases real estate in Japan. Curtis, thanks very much for joining us. So that Q2 GDP figure revised up significantly. So have the worries about Japan been overblown?
Well, I think so. All this talk about the yen being in a 15-year high neglects to mention the inflation adjustment for other countries having experienced quite a bit of inflation during that period, and Japan having had some deflation during that period. For the yen to be at the same level it was 15 years ago, it would have to be trading closer to 50 yen to the dollar.
Now, Barclays research analysts said yesterday that Japan has no choice but to intervene in currency markets in order to prevent the yen's strength from decimating the country's industry. Does that seem a bit extreme to you? I'm guessing you're going to say yes.
Yes, I don't think it needs to go that far. I think what Japanese companies can do is start spending abroad. You're going to see one after another very large purchases by Japanese companies spending yen to buy overseas assets. The level of cash, the cash balances of Japanese companies are at record highs. These companies can afford to pay $2, $3, $4, $5 billion cash for these overseas purchases. So we've only seen a few so far, but there's going to be one after another with the yen trading at these levels. All
right, so they're gonna buy things overseas, but that doesn't help the jobs market at home in Japan, does it?
Not much, but it does actually put a stop to the yen's rise, because buying those overseas assets, they have to buy the currency to pay for them. So I think that changes the tide. I don't think it requires government intervention.
Now, we had an interesting situation yesterday. We had the Japanese finance minister expressing his annoyance at China for buying up Japanese bonds. He said, "I feel strange that China can buy Japanese government bonds while Japan can't buy theirs." He's got a point, doesn't he?
Well, yes, I think he has a point. I think China's surplus has to go somewhere. Certainly, they're not that comfortable with the dollar or the euro, so it comes to Japan. Japan's debt market is one of the largest, most liquid markets in the world, so it's easy to get in and out of.
Well, this is it. Japan, the Japanese yen is something that people buy because of its relativity as a safe haven. But how do you? I mean, you want your currency to be attractive. You want people to be interested in buying your bonds. But in this case, Japan actually really wants to make itself a little bit less attractive.
Well, I think it's not in a point to decide. How can I say? It's not in a position to decide. I think the market will decide where the yen trades. I think people will make decisions based on where it's trading. So a lot of Japanese, for example, are looking to travel abroad this fall. Reservations for travel to the U.S. are up 50% year on year, as people use this as a chance to take a trip to the U.S.
What do you think about this stimulus plan that Khan has put forward? Do you think it's going to make any difference? $11 billion, it's not a whole lot of money.
No, it's not a lot of money. It is a political move. It's not going to make a fundamental difference. I think the economy will strengthen when each individual company makes the difficult choices. And, of course, the sum total creates a recovery. I don't think it's going to come from the politicians.
Got it. Curtis Freeze, CEO of Gro-Bels, thank you so much for joining us.